What's up, guys? Welcome back to another video. Today was a crazy day in the market, and I promised a recap on YouTube, so I'm going to give you guys that really quick. But before we do that, everything we're going to talk about today, I actually posted on Twitter, I posted on Instagram. Like, I literally gave you guys the watch list today, and everything hit. Everybody hit 100% in my group. For those who took the plays, if you did take it and you weren't in my group, awesome, cool, you made some money. But definitely follow me on Twitter and Instagram, so even if you're not in the group, you know, maybe it's not something you want to do right now, you could definitely take advantage of, you know, plays whenever I post them on social media. So with that being said, let's take it to the screens and let's go over these plays. So first up, you can see the screenshot on Twitter. You know, I said I was watching SPY for tomorrow. Over 438, I like a move towards 440, then 442. Then I said, if we reject, I got us going to 435, 433.30, then 431. Also watching those same levels for bounces too. Now let's see what we have here. So this is what I charted yesterday, right? I charted this last night because I always go into the market with a plan. I saw that we had levels at 438, 435.15, 433.30, and 431. And it was pretty simple what happened. So as you can see, post-market, meaning Monday after close, we were testing 438 again, as you can see right here. But previously we rejected and then we rejected again. So I figured, okay, if we can break 438, we can definitely make a move towards 440, then 442. But as you can see, we actually never even touched 438 or close to it this morning. The highest we hit was around 437.16, and then we went on the decline. And as you can see, we broke under our 435 level. Check this out, right? So I like breaking holds. And let me go on the 15 minutes just so it's even clearer. So as you can see, we rejected off this level, we broke under our 435 level, and then we consolidated before breaking down again. Remember, I don't just get into plays after they break a level. I need signs of a strong break. So some consolidation, so a retest, something of that regard. And then as you can see, we got that. So we definitely rejected our 435, right? We're inputs, cool. You know, came here again, retested our 433.30 level, rejected off of that level, and then look, we went all the way down, blew right past our 431 level, broke down under there, bounced off this red line, which is the 200-day moving average, before retesting and rejecting off 431 again. So there, I mean, this was just a clear move, super easy, and literally you saw the screenshot on the screen. It was literally timed out perfectly. You know, the levels were perfect, the entry is perfect, the exit is perfect. I mean, we have all our levels because we had a plan going into the market today, right? Like I said, over 438, you know, we would have had 440, then 442, but we never had that. So what's the plan? All right, we're gonna play the downside. We had 435, 433.30, and then 431 for the win. And we definitely had a lot of people hit 100% on these plays. I got a lot of DMs today about this play on Instagram, on Discord, wherever you guys took the play. There was a lot of people who made money off of this, so that was dope. Next, we have AMD. Now, AMD, let's pull up the screenshot again. The orange line is the 4-hour trend line resistance for AMD. Also, we have an ascending triangle on the 15-minute and the 5-minute chart. A strong break above is bullish and remains bullish as long as it can break 124.40 and 125.05. Those could easily be rejection levels. A break below triangle is obviously bearish. And I posted this morning around 8:20 a.m. so 10 minutes before the market opened on March 1st, just in case you're watching this at a later date. Now, here's what we have. So obviously I said the 4-hour resistance line. So if I zoom out a little bit, you guys can see where that orange line is at trend line resistance. Price hasn't broken above there for a while. And if we zoom in a little bit, and we're on the 15-minute chart right now, you can see that we have an ascending triangle. This is a bullish pattern, but if you watch one of my recent videos, or I think my most recent video on reading chart patterns and understanding a few different types of chart patterns, at least my favorite kinds. We talked about the entries, the exits, and you would have known that I'm very neutral when it comes to triangles. Like, okay, this is an ascending triangle. This is known as a bullish pattern, but I'm very neutral. So I'll play it on the downside too if the opportunity presents itself. And obviously it did right here, right? It broke under as soon as the market opened. That's our trigger for puts. After a strong break, that's our trigger for puts. Obviously you have, I did not chart this, but you did have a little level right here, but it clearly broke under that. And then as you can see, it went in a straight line to the downside. This was a 1,000% play if you got in on the entry and you assuming you sold at the very bottom, right? That's a crazy play. Now, I didn't sell right there. I personally sold around 119. I want to say around that 119 level, because I'm day trading, so you don't necessarily want to bag hold. A lot of times you aren't going to catch the complete move, especially when you're day trading, because you just can't know certain things, right? 20/20 vision, right? When it's hindsight, but when it's when you're actually doing it, you're not going to know exactly what the price is going to do. So see profit, take profit kind of thing, especially in this market. But as you can see, we got really good breaks to the downside, and we absolutely destroyed any level that I had. I had levels at 120.72, 119.26, 116.14, and you can see that it completely just shot through those levels. And if you caught this play, like I said, this was on Instagram, this was on Twitter. I put this in the trading group. Everybody caught this play. This was a super dope play. Literally, this is one of those plays where if you have a small account and you take this play with a perfect entry and you sell when you're supposed to sell, this small account can turn into a much bigger account in one play. Like literally, I say all the time, it only takes one play for you to change your account. And this is one of those plays. Ascending triangle, break to the downside, easy move. Lastly, we have Tesla, and I have two different screenshots for this one. So first, Tesla overall has been on a downtrend, but after yesterday's move, we look to be flagging on the hourly, 15-minute, and 5-minute. Over 891, I look for calls, and a break under flag, I'll look for puts. Now, I mentioned yesterday's move. This is yesterday's move. We were in a bull pennant, we broke above that, and then we went into this flag/consolidation phase right here, if you didn't know what I was talking about. Next screenshot, Tesla still in flag, but you can see the rising wedge forming on the 5-minute. This is a bullish pattern. Now, that was my mistake. A rising wedge is not a bullish pattern. A falling wedge is a bullish pattern. A rising wedge is a bearish pattern. I just had just a mistake. My bad. But as you can see, depending on your risk tolerance, you can take over wedge and see if it breaks above flag or wait for both to break. What does that mean exactly? So in this flag, we have a range of two different prices, right? The bottom price, or this resistance or support level, is 857. Up here, the resistance level is 874.40, right? So when I mean a break above the wedge and the flag, I'm talking about, okay, we break out of the wedge, but before I get in calls, I'm gonna break out of the resistance level as well before I enter. Now, you may be wondering, Isaac, where is this wedge? It doesn't look very clear. Well, we're on the 5-minute chart, and the candles are a little bit bigger, so it's going to look ugly, right? This is where I saw the wedge, right? You can't really see it like that. I have an eye for it, so I was able to identify it relatively easy. But if you go on the 1 minute, it's much clearer, right? Because the 1 minute obviously has more candles, and it's not going to look as tight. It's going to be more loose. It's going to be a lot more volatile looking. So as you can see, we had a long range, tight consolidation, and then a strong breakout. Now, I didn't take this play on the 1 minute chart. I took it on the 5-minute chart. I rarely trade on the 1 minute because the 1 minute can give a lot of false signals, and I'd rather avoid that. So I keep it safe and I trade on the 5-minute. So I clearly saw this break, right? It was a strong break, really strong break. It went from 860.92, so around 861, and it went straight to 874, right? It was like a straight line shot. So for me, I didn't enter on this candle because I was like, okay, we may just reject once we get to 874. That's a risky play. If I get it right now, it rejects on me, I lose all that money. So what I did was I waited on the next candle to confirm the break above the falling wedge. And so what I did was I entered on this candle and I rode the price from 874, so right at the break, the resistance level, and I sold. Literally, I had a perfect exit. I sold right at 886. My price target was 890, but you know, with a strong candle like this or two strong candles like this, you can expect a heavy retracement. So usually what you'll notice is when the stock just goes in a straight line, it just goes up, no type of break or no type of retracement or anything like that, is going to come back down. So for this, I was like, okay, this is a really strong move up, 2 candles in a row. I'm gonna go ahead and take profit before it, you know, retraces on me. And as you can see, it went straight up, it went straight back down, and then went right back into this consolidation flag phase. So this was technically a weak breakout based on my definition, how I see things. And if you're wondering how did I know when to sell, it's a pretty simple rule for me. So if a stock just goes up in a straight line like Tesla did right here, I'm going to sell at the top. I'm not going to see if it can go any higher. I'm going to sell into the green. And why is that? When a stock just goes in a straight line, it is not a strong move for me. I need consolidation, I need breaks, I need chart patterns, right? Those are the kind of things I need. If it just goes in a straight line up, it can go in a straight line right back down. And this is what it did. Look right here. As you can see, it broke the falling wedge, right? Awesome. Cool break, really strong move. 2 really strong moves in a row. No breaks, no consolidation. It didn't even, you know, get phased by the 874 resistance level that we had here. So this was what I call a false breakout. Right, it was a false breakout because it came right back down, and now it's just in that zone still. It came right back where it was between 857 and 874. This right here was a weak move up, but we caught it anyways, and that was a really good move for us. So 3 for 3 on the watch list. This was a really good play. Hopefully that explanation was cool for you guys. If you didn't understand some of the patterns I was talking about, definitely check out my last video on chart patterns. I went over it. From what I can tell, it was a really helpful video for a lot of people, so definitely check that out if you're interested. Remember, follow me on Instagram and Twitter if you want to, you know, take advantage of some of the free plays that I put out. You know, free game for everybody. There's enough money for everybody out here, so definitely take advantage of that. Before you go, make sure you like and subscribe, and I will see you guys in the next video.